Dishonest banking creates credit bubbles because the fake dollars that are generated are confused for real loanable funds. People think, oh, this is real profit, but it's just inflation. It's just dollars being printed that are not backed by anything and cannot be redeemed for.
You're watching Silver News Daily. Subscribe for more.
Everything you thought was secure is already unraveling. The US dollar, the bedrock of global finance, is quietly dying. And while most people are still obsessing over stocks or crypto, a few are preparing for what comes next. A brutal economic reset that could leave cities burning and fortunes erased. But in this chaos, something unexpected is happening. Silver, the most underestimated asset on Earth, is being positioned to become the new standard of wealth. One expert is warning that silver could soon hit $10,000 an ounce, not in decades, but in the wake of a violent monetary collapse that may already be underway. Political assassinations, riots, mobs, and systemic failure. This isn't fear-mongering. It's a glimpse into a future we've already seen in history: Weimar Germany, Zimbabwe, Venezuela. In every single case, when paper currency collapsed, silver didn't just rise. It exploded in purchasing power. Riverfront mansions, farmland, and even entire towns traded hands for just ounces of metal. And now, with America inching closer to that same cliff, the opportunity is back, but not for long. Because once the panic sets in, once the mobs are in the streets and the headlines start screaming collapse, it'll be too late. So why are experts sounding the alarm now? And why could your entire financial future depend on how much silver you hold when the lights go out? Stay with me, because what you're about to hear could be the most important financial warning of your life.
The end of the world itself as we know it. So let's
Mad Max is about somewhere in the middle there.
Yes, Mad Max, the techno dystopia, all these things. So I'm a fairly Pollyannish, optimistic kind of guy, so I had hoped that we might even avoid in-game violence entirely, and this might be some sort of smooth transition, relatively. I mean, obviously, there's not going to be no disruptions at all, but a relatively smooth transition into a gold standard. However, recent violence has disabused me of that, and there's both the random violence and the political violence. And the random violence was that poor girl who got stabbed in the subway, and the political violence that recently occurred was Charlie Kirk's assassination. And one thing of note, both of those were recorded in 4K high def. So in the olden days, when you saw, when President Garfield was assassinated, you read in the newspaper, President Garfield was assassinated, and you go, oh, geez, that's terrible, and you fold up the newspaper and go about your day. Even when the Kennedy was assassinated, we have one film of the grainy Zapruder tape, and it's shaking like this, and there's some fuzzy images, and you kind of see Kennedy's head jerk back, and that's about it. But now we have 4K high def. I mean, you can see it all, and it's really horrible. And we're probably going to see a good bit more of that. Unfortunately, it's just the nature of the society we have now, where the information is available and it's going to be produced. So the question is, how much violence should we expect? And so let's use the Weimar Republic as a guide. Is roughly what happens during a hyperinflation. So Weimar Germany was a nation of 60 million people, I think 61 million people. So between 1918 and 1928, there were 376 political assassinations. Of those, Dunnigan.
The collapse of a currency doesn't happen all at once. It starts with slow erosion, invisible to most, until the system suddenly buckles under its own weight. That's exactly what's unfolding with the US dollar right now. For years, the Federal Reserve has papered over economic weakness with stimulus and rate manipulation. But the damage is done. Since 2020, the M2 money supply has exploded by over 40%, pushing asset prices to unsustainable highs while simultaneously diluting the purchasing power of every dollar in existence. And now, with U.S. debt surpassing $36 trillion and interest payments outpacing defense spending, the math is breaking down. Foreign nations are watching. BRICS countries have already begun their exodus from dollar dependence, rapidly increasing their gold reserves while engineering new settlement systems that exclude the greenback entirely. Meanwhile, inflation, though claimed to be under control, remains persistently elevated, with real yields staying negative in key sectors. The result? A slow-motion disintegration of confidence in fiat currency, eerily similar to what happened in Weimar Germany back then. It began with denial. Then came the money printing. Then, almost overnight, the paper mark was worthless. Americans aren't immune. We're simply further behind on the curve. When belief in the dollar cracks, whether through a global shift, political instability, or monetary overreach, there will be no time to reposition. The market will reprice everything instantly. That's why silver isn't just a hedge anymore. It's insurance. The dollar is quietly bleeding out. Silver is the tourniquet.
Expressed that yet, but we could go a much more positive route than something like Weimar, and we could end up with someone like Javier Milei running the country. So what are some things, because your channel is dedicated to what your viewers can do to self-actualize, take action, right? So I want to give the advice here. What are some things we can do to maximize our personal safety, as well as help out our communities move forward as best as possible? And the most important thing by far to do is to unleash the free market. If the market can clear, no one is going to starve to death or die of malnutrition. So if you can buy the assets, if you can avoid the Bolshevism, the most important thing to do is avoid the Bolshevism. And if somewhere's turning Bolshevik, you probably need to leave. If you're on Staten Island, for example, you probably should think about leaving. Even if you're not in the main part of New York City, you're probably close enough. So if you get to where you can be, say it doesn't need to be a libertarian utopia. You don't have to be in the free state of New Hampshire. If it's free enough, the market will be allowed to clear. The people will sell their assets to get the money they need to buy food. The stackers will buy those assets, acquire, vast sums of assets, and they will, the market will clear and we will move forward. And the stackers watching these videos today will be the next round of capitalists. The longer, I should add this, a lot of the violence would be, but not all, would be driven by failure of the market to clear. So, a lot of this violence comes from, if you imagine you're somebody who didn't know about your channel, didn't prepare at all, just a normal working guy, and you're driving home and gas is now $50 a gallon, and you have to get in line at the gas station because you need fuel to go to work tomorrow. And you have to tell your wife and children there's no dinner tonight because you need $200 to have enough gas for work tomorrow, right? So you're already processing all this mental, pain that your family is about to go through, and some jerk cuts in front of you at the gas station. Now, on a normal day, you just roll down your window, you go, "Hey, there's a line, bud," and what a jerk, But when you're on this high stress situation already, you get out of your car, you start kicking his bumper and screaming at him. He gets out, you start shoving each other, and one of you shoots the other, right? This is the kind of, simmering violence that occurs in a hyperinflationary environment because most people are not prepared and they are, emotionally dealing with the stress of having their currency become, turned to dust in front of their eyes, right? So the longer it takes for the market to clear, the more attractive alternatives like communism and fascism are going to look to desperate people. So the most important thing to do by far is to get the silver, especially the silver and copper. The gold can vault, but the silver and copper must flow out and be traded amongst the people. It's the most important thing I will ever do in my life, I think, is to get the silver stacks out. So, like I said, you, dear viewer, you can assist the market in clearing by disgorging your silver, purchasing assets. Politics, in my view, is massively overrated in its ability to solve problems. It's not helping. I mean, you saw the wave of what was promised with this current administration. When they were running, we were going to open up Fort Knox. We were going to see what was inside. We were going to make the government more efficient. And lo and behold, what are we doing now? We're bombing other countries. None of the efficiency stuff has been, the promised efficiency stuff has happened. So I don't think politics is going to help very much at all.
To understand where we're going, you have to look at where we've been. And nothing mirrors America's current trajectory more closely than the Weimar Republic. In the early 1920s, Germany faced massive war debts, political instability, and a desperate central bank that began printing money to cover budget shortfalls. At first, it seemed manageable. Then inflation accelerated. Prices doubled, then tripled. By the end of the collapse, a loaf of bread cost billions of marks, and paper currency was so worthless it was burned for heat. But while paper wealth vaporized, silver and gold exploded in value. People who held physical metals didn't just survive, they thrived. They bought real estate for a handful of silver coins. They acquired businesses, land, and homes, while the rest of the population begged for food. In some towns, just 5 ounces of gold or 100 ounces of silver was enough to purchase an entire estate. That's the purchasing power shift hyperinflation brings. Not years of slow gains, but overnight resets where hard assets become the only assets. And the similarities to today are impossible to ignore. Exploding national debt, manipulated interest rates, collapsing trust in institutions. America is walking the exact same path experts are warning that the moment public confidence in fiat breaks, silver could reprice violently, just like it did in Weimar Germany. But this time, the world is far more interconnected, and the velocity of collapse could be even faster. The window to prepare is closing. History isn't just rhyming, it's repeating.
So there's 350 died from 376 died from political assassinations. About 400 people died in street violence. And this is the political street violence of, two mobs getting together and there's dead in the street afterwards. About 20,000 people died from malnutrition related to issues like malnutrition-related issues like tuberculosis and influenza. So this is the supply chain breakdown. This is the food being stuck in the fields, not getting into the cities, and the people going hungry. So about 20,000 people suffered from that. About 1,000 people outright starved to death, where they just could not get enough calories and their bodies shut down and they died. Additionally, shops and farms were often looted, and there's a book, When Money Dies, that goes into this in great detail. Shops would be looted by raiding parties. We're no stranger to that already. I mean, shops are already being looted all the time by flash mobs, and farms as well. Especially farms near the cities, people would make excursions out, and they in the book, When Money Dies, they went into detail about how they would, they would take the stuff they wanted and then they would inflict extreme violence upon the farm for no reason. Kill the pigs. They wouldn't kill the pigs. They wouldn't eat the pigs. They would just kill them and leave them there. Burn the crops, even if they weren't going to eat them. They saw the farmers. It was just mob violence. Mobs behave violently. They saw the farmers had things that they didn't have, and they reacted with madness and violence. So the good news was the situation stabilized 1930 onwards when the money was restored. That pure chaos of just complete, shutdown of the economy, nothing working, people dying in the streets. It only lasted for about 6 months between 1922 and 1923. And I want to point out this, once again, this was a country of 61 million people. So these numbers, while scary, and it's going to be even scarier in 4K high def. You're going to log onto your computer and go onto X, and you're just going to see, people being murdered. To some level. I don't know to which level. But these numbers, while scary, are not civilization-destroying numbers. These people went through World War I. The World War, 20,000 dead is nothing in World War I. So these are not civilization-destroying numbers. And I also want to stress this, none of this is predetermined. I'm not saying we are guaranteed going to go down the Weimar route. Weimar was a very unique case and a unique time in history. So Argentina just had a hyperinflation. They got Javier Milei out of it, who's probably the most libertarian president on the face of the planet right now, and is doing significant. Now, he's not, he hasn't restored the honest money. I'm not sure he understands, despite his, economic leanings, I'm not sure he understands that gold and silver are money itself. He has.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
When people hear 10,000 silver, they roll their eyes until they see the math. Because in a true currency collapse, it's not silver rising, it's the dollar dying. And once you flip that perspective, the numbers stop sounding crazy and start looking inevitable. Let's break it down. Today, silver trades around $50 an ounce. But that's under a fiat system that still has a thin layer of trust holding it together. Remove that trust, like in a hyperinflationary spiral, and the entire pricing mechanism breaks. Silver's purchasing power doesn't just rise in a straight line, it detonates. In Weimar, Germany, 1 ounce of gold went from 170 marks to over 87 trillion marks. Silver followed suit, rising exponentially in real-world value. And when you apply that same scenario to America's current financial footprint, a $36 trillion debt bomb, unchecked money printing, and dollar rejection by global trade blocs, you begin to understand why some analysts now forecast silver hitting 5 figures. Not because of demand, not because of mining, but because there's no other yardstick left. When fiat burns, people seek anything with intrinsic value: land, food, shelter, and silver. Experts say that in the endgame, 100 ounces of silver could buy what today costs $1 million. That's not speculation. That's monetary math in a broken system. If the dollar's foundation collapses, silver isn't going up. It's simply revealing what it was worth all along.
How many were between 1922 and 1923?
I would guess half just to be aggressive.
350.
Out of
376. So, and that was the peak of the inflationary collapse. That's when there were wheelbarrows full of money, wheelbarrows full of fake money littering the streets, and people would steal the wheelbarrow and leave the bills. People wallpapering their houses, making dresses out of the bills, whatever, right? So that's when the currency was completely worthless, and these would be the equivalent. The people getting assassinated were the equivalent of like Jerome Powell, Scott Bessent, mayors, governors, those sorts of things. I don't believe any heads of state were assassinated during that time. Additionally, so in addition to those 350 political assassinations, and if you want to extrapolate that level of violence to a country our size, you should probably multiply it by 6 to get a very rough back of the envelope guesstimation. So we're talking about probably about 2,000 political assassinations if we follow the Weimar trajectory. In addition, about 400 people died in street violence. This is when the communists and the fascists were clashing in the in open streets in Berlin. And I make the point. I've made the point before. We've said you can buy during the hyperinflation in Weimar. You could buy a house for 100 ounces of silver. You could buy a house with 5 ounces of gold, about 100 ounces of silver. Would buy a nice house, riverfront property in Berlin. The problem was, if you peel back the layer, Ernst Röhm and his stormtroopers were having an open battle with the communists right outside your door. So you close the window curtain again. So there's a reason the prices were that low. And judging by what just happened in New York, we could see very similar things happening then. There's going to be a reason, the penthouse apartment with a view of Times Square or a view of Central Park is 100 ounces of silver, right? Not gold, silver. We're talking that low.
While most investors obsess over charts and spot prices, the real alarm bells are ringing in the physical market. And they're deafening. Silver isn't just rising because of hype. It's rising because the system that underpins its pricing is breaking. Look at the COMEX. Yes, it still shows over 500 million ounces in inventory, but that number is becoming increasingly irrelevant. Why? Because those bars aren't staying put. Arbitrage traders are draining COMEX vaults and shipping silver to London, where spot premiums are higher and physical demand is surging. This isn't some small anomaly. It's a systemic shift. The paper market is being outpaced by real-world demand, and as the gap widens, the premiums explode. Investors are now paying far above spot to secure physical silver because they understand the game is changing. The true price of silver isn't on a screen. It's what someone is willing to pay to actually hold it in their hands. And with institutional flows pouring into silver ETFs, industrial users stockpiling supply, and sovereign mints reporting record demand, that premium pressure is only intensifying. What we're seeing is a silent decoupling, the divorce of paper from physical. And when that breaks fully, the revaluation won't be orderly. It will be violent. Silver isn't scarce on paper, but in the real world, it's disappearing. And that's where the next phase begins.
Yeah, not gold and silver. I apologize. Yes, prices of all other goods in gold and silver terms will drop until people want to until the gold gets coaxed out of its hiding places, right? This is what we saw this, every time you see an economic crash, this is what you see. The prices in the real terms collapse until the gold gets coaxed out of its hiding spots. Excuse me. So the returns, additionally, returns on business ventures can exceed the wealth generated by one's own labor and stored as gold. So if I take my wealth that I earned through my day job and I just store it as gold, that's great. It's savings. A penny saved is a penny earned, as they say. If I apply it to business ventures, it can exceed the wealth that I would generate on my own. But there is there's a risk that the business venture fails, and then I lose my investment, right? So that's why you have a mix of both. Now, of course, the modern inflationary system has convinced us that gold is not money and we don't need it as part of our portfolio, and that treasury bonds serve the purpose of gold now to basically protect your wealth in a bulletproof, a foolproof scheme, as it were. So for the reasons I listed above, a diversified portfolio is considered superior to just vaulting gold, because a man with 100 ounces of gold is so wealthy, but a man with 100 ounces of gold plus business ventures is considerably wealthier. Let's see, where was I? Oh, so we can edit this part out. I got stuck here. Okay, yes. So I would recommend right now and I'm not allowed to over recommend. So this is not advice, but I would consider thinking about, I would consider thinking about overstacking now. So not just having you could probably do just fine with the gentleman's portfolio right now, but if you overstack now, so get more gold and silver now, and then balancing it out to the gentleman's portfolio during the crash, you'll probably outperform. In fact, if you were to overstack now and then during the crash disgorge almost everything, and then let the assets generate revenue back into pulling you back into the gentleman's portfolio, you'll probably do even better still. Just bearing in mind that there are risks associated with that. So nothing in life is risk-free. So of course, each user, I have no particular, I have no idea which stocks or which land is going to be the most beneficial. All I know is that, at the moment of the panic, it will be the best time you'll ever see in your human life to disgorge your gold and silver and exchange it for real assets. And I will say, in the future, if you ever feel like things are too jubilant, like people are getting too excited, like a bubble has formed, which is going to be our next topic real quick, you can always retreat back to precious metals, because they'll always be.
Economic collapse doesn't happen in a vacuum. It spills into the streets. And the same forces tearing down the dollar are now fueling a powder keg of civil unrest. Experts are warning that if the dollar enters freefall, the U.S. could face a period of chaos eerily reminiscent of Weimar Germany's darkest days. Picture this: thousands of political assassinations, organized mobs, and mass violence erupting as public trust shatters, not in theory, but as a real-world response to monetary breakdown. In the 1920s Germany, hyperinflation didn't just destroy savings, it unleashed total social collapse. Armed gangs, mass riots, government assassinations, and a population pushed to the brink by hunger and hopelessness. Now ask yourself, how different is today's America? Trust in government is near all-time lows. Political divisions are deeper than ever. And the economy? It's being held together by printed money and blind faith. Remove that faith, and the consequences are explosive. Inflation already eats away at wages, savings, and pensions. Now imagine when the system can no longer afford basic services, and every dollar buys less by the hour. History shows us what happens next. Anger, desperation, violence. But silver? It stays the same. In every societal breakdown, silver retains value, buying food, safety, shelter. When nothing else can, fiat burns. Cities burn, but real money still buys what matters.
Divvy up the responsibility of taking care of him in his old age. That's the traditional savings account. If you have a lot of wealth, then you can follow the gentleman's portfolio that I'm discussing now. So the traditional gentleman's portfolio had a good mix of liquid and illiquid assets, along with a pretty large safety net of just dead gold sitting in a vault. And so but the inflationary system has tricked us into the 60-40 portfolio, which is 60% stocks, 40% bonds, and with other considerations like real estate sprinkled in. So compared to the gentleman's portfolio of 33, 33, 33, this would be something like 0 20%, and then 80%, right? So they've got everybody massively on one side of the ship. So the question is, will we return to the traditional portfolio post-crash? Almost absolutely. I mean, if sound money created that outcome, once we return to sound money, we're probably going to end up right back at that outcome where that is considered, a good mix of liquidity and risk. So if gold is money, why have a complex portfolio at all, right? Some of your viewers are going to wonder, I have maybe over the course of this, I've saved something like 100 ounces of gold, and I'm going to go through the crash with 100 ounces of gold. Why don't I just live on that after the crash, and I can just draw down that, and I don't have to worry about buying land and investing in businesses and things? First off, there's always the risk of theft or loss of gold, right? Be it vaulting, there's always the risk of something bad happen. If you're vaulting, the vaults might steal it, might get confiscated government-wise. If you keep it at home, it might get stolen. A flood might sweep your house and you never find your treasure again, right? So you just want to have diversity on just for its own sake, not to have all of your wealth in one specific spot, tucked away in your house somewhere. Secondly, money is used in transactions. That's the purpose. Gold is money and silver is money. And what do you use money for? You use it to trade with, right? So if everyone is just hiding gold pieces in their house, the market is going to drop prices until the gold is coaxed out of hiding. Now, the Keynesians make the mistake that this is somehow a bad thing, that the government needs to incentivize or force people to get the gold out of their house. That's not true at all. If people hoard gold, if everyone's scared and says, "Oh, I don't trust the market. I'm just gonna hoard my savings in my house, forever," the prices will drop and drop and drop and drop and drop until someone says, "Well, I just can't pass this offer."
In every hyperinflationary collapse, a single truth emerges. When paper dies, hard assets reign, and nothing is harder than real estate. But here's where it gets shocking. During the Weimar collapse, properties that once sold for millions of marks were being snapped up for just a handful of silver coins. Imagine buying a riverfront mansion for 100 ounces of silver. That isn't fantasy, it's historical precedent, and the conditions that made it possible are now reappearing. As fiat currencies lose credibility, the pricing of everything flips. What once cost hundreds of thousands in paper money now trades for real value, measured in ounces, not dollars. Experts say this is exactly what could happen if the dollar breaks. Picture this: foreclosures everywhere, no lending, no liquidity, just panic, and silver holders stepping in as the only buyers with recognized value. It's not just about price, it's about who has the money that people still trust. In Venezuela, families bartered gold flakes for groceries. In Argentina, US dollars bought houses for pennies on the dollar. In the US, it could be silver. Because when traditional financing collapses, cash buyers rule the market. And those buyers will be the ones holding sound money. This is why analysts are screaming that silver isn't just an investment. It's a strategy. When collapse hits, silver won't just protect wealth. It will unlock generational opportunity.
How about that? Everyone's suddenly starting to look like the gentleman's portfolio once again. So the gentleman's portfolio is 1/3 gold and silver. It's liquid, but it owns, and this is I'm talking about physical possession or in a vault nearby. It's very liquid. You can literally go get your money and go spend it because it is money, but it earns no returns. That's the thing everyone's always complaining about. Gold has no dividends. That is true. Gold has no yields. So you keep 1/3 in that. You can have 1/3 in productive land. This is like owning a farmland, or even owning your, if you're running a bakery out of your house or something, which is what a lot of people did back in the old days. They would, pickle things in their house and then go sell the pickle jars. That counts as productive land. You are putting your land to productive use. So you can do things like that if you're particularly wealthy. And by the way, your viewers, this is not. I can't promise anything because this is just the way, I'm not allowed to promise anything. Advice would be illegal. But your viewers are probably going to be some of the wealthiest people on earth at the end of this if they followed your advice on the other side of the end game. And they're going to have a lot of wealth, particularly in the first form of gold and silver, and they're going to have to think about what they want to do with that. So one of the options is productive land. You can get productive land, farmland, shops buy commercial real estate, buy industrial real estate, and then you don't have to be you can just be the landlord. You don't have to be the capitalist, you don't have to be the entrepreneur. You can just be the capitalist. You could say, I have the land, you can work this land, and you can pay me rent for the use of this land, right? And then the final one is 1/3 stocks and bonds. This is investing in companies directly. Now, you do not have to. One thing people misunderstand in the inflationary period is that, oh, we have to have a broad portfolio of this, that, and the other thing. We have to have a 1,000 different companies, most of which we've never heard of, and we have no idea what they do, but number go up, so the 401k is a good idea, right? In the post-crash, you're probably going to be investing in local businesses, local, local stuff. And if you want to invest in things you are an expert in, you might invest in, for example, if you're an engineer, you might invest in engineering firms that you know about done it, right? It would be for the individual, investor to decide. It probably wouldn't be huge swaths of the population having large amounts of stocks. In fact, the whole gentleman's portfolio, the reason it's called the gentleman's portfolio is because it's for people of wealth. If you don't have wealth, you have no business being in the stock market at all. In fact, that's how JP Morgan knew the stock market was overflated, because he was getting a shoe shine, and the shoe shine boy said, "Hey, I'm in that stock market too." That's when JP Morgan went and sold all his shares immediately. The working man's portfolio is to have 8 children, take care of them all, and then save a bit of money for himself, and then have his children.
Behind every currency collapse lies a brutal supply and demand imbalance, and silver is at the heart of one unfolding right now. While investors focus on macro headlines, a hidden crisis is forming deep within the silver supply chain. Global mining output has stagnated, geopolitical risks are rising, and operational costs are surging. Miners are digging deeper, extracting less, and discovering fewer new deposits. The result? A shrinking pipeline with no relief in sight. And just as supply tightens, industrial demand is detonating. In 2025 alone, over 17 million electric vehicles were delivered. Each packed with more silver than traditional cars, solar power is devouring silver at record levels, driven by global mandates for net zero emissions. And now, a new player has entered the scene. Artificial intelligence, AI data centers, and 5G infrastructure are consuming vast amounts of silver for conductivity and cooling. All of this is pushing industrial demand past 1 billion ounces annually, levels the mining sector simply can't keep up with. And when demand outpaces supply in a critical resource, prices don't just rise, they rupture. But here's the kicker. In a collapse scenario, industrial buyers will still need silver, but silver holders will be calling the shots. Supply constraints aren't just a tailwind, they're a time bomb. And when it explodes, silver's true value will be revealed.
And so I don't think some of the viewers might be inspired, like, oh, I need to run for mayor, I need to run for alderman, I need to do something to lead my community. If you don't want to, and remember, 376 people were assassinated in this period. So if you don't want to, I don't think you need to. You don't have to heed the call to be a local leader unless this is something you want to do. So unless you are running for office or behaving imprudently, I mean, if you're running into a bar and you're like, drinks for everybody, I'm going to, and you start, in fact, I'm going to buy the whole bar, and you start slapping gold coins down on the table, yeah, you're probably going to attract some unwanted attention. So behave prudently and don't run, if you're running for political office saying, I'm going to, throw out all the bums, the political risk might be higher than normal, or the political risk might be a little bit high. The personal risk, I should say. But if you don't behave imprudently and you're not running for public office and you're not making a big stink about things, the personal risk will be higher than it is right now, probably, but it's not going to be catastrophic. I mean, most people in Weimar Germany, they did okay. They in terms of violence, most people didn't walk around thinking they were going to be mobbed in the street immediately. It was political organizations that were fighting each other, right? So the crisis phase should only last about 3 to 6 months, maybe even less. We don't have the Weimar problem lasted so long because they had other countries were holding them hostage, basically saying you must pay us in gold, of gold they did not in fact have, right? So the U.S. can default on its debt. Then there's no one who's going to say, we're going to invade you if you don't pay us. Well, okay, we'll come invade us, right? It's come and take it. The U.S. will default on its debt. That will cause the crisis to spike. But once that spikes, people realize that they're not going to get the money they thought they were going to get. Everyone has a good cry. Everyone gets up the next day and gets back to work. The crisis phase, like I said, should only last 3 to 6 months, maybe even less. So even if you don't hunker down, I know some people are building shelters out in the middle of nowhere, prepping hard, thinking things are going to get very Mad Maxy. Even if you don't hunker down, the risks are not that elevated as long as you remain prudent. Like I said, if you buy the Lamborghini, put it in your garage and close the door. You don't drive around town in the Lamborghini, right? So we all have to decide, in the more general sense, we all have to decide what is worth living for and what is worth dying for as well. So I would just, in the most general advice, I would say follow your conscience through the end game and after. And I do want to assure the viewer, if you follow the Austrian School of Economics at all, you believe in spontaneous order. And spontaneous order will emerge from the chaos. Now, we can't see the spontaneous order, right? I can't tell you what factories are going to exist after the crash. All I know is that people will need things and people will go to work to provide things that other people need. So we should see a return to order fairly quickly after the chaos.
While the physical market screams shortage, another battle is unfolding quietly inside the paper markets that price silver globally. For years, COMEX has acted as the central hub for silver futures. But cracks are forming, and institutional players are beginning to shift their strategies. ETFs backed by physical silver have seen strong inflows all year, and that demand isn't passive. It's pulling real metal out of circulation and forcing higher premiums, especially in London, where arbitrage trades are draining COMEX inventories. What's happening here is a stealth reallocation. The smart money, the banks, the funds, the high net worth investors, they're exiting paper promises and demanding metal in hand. Why? Because they know that in a crisis, contracts are only as good as the counterparty. And in a true collapse scenario, trust in the system vanishes. That's when the paper-to-physical spread breaks. We've already seen signs: soaring premiums, delayed deliveries, vaults transferring ownership behind closed doors. When the tipping point comes and investors all try to convert paper into physical at once, the system will seize up. That's when prices decouple violently and silver reprices in real time, not based on futures contracts or COMEX settlements, but on what someone will pay right now to take delivery. And when that moment hits, those holding promises will be left behind. Only those holding metal will be ready.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
We have cracked the code. We have broken Gresham's law, right? We have created new money, right? When people are saying that, they are in effect defying. They are claiming they have broken natural law, that they have defied natural law. They're probably wrong. That's the kindest way I can put it. If someone is saying that, they're probably wrong and they're probably shining you over. Again, this time is different, right? Oh, this is, now we have the real thing. Gold was money. That was analog money. This time is different. Now we have digital money. Now we have Bitcoin, where you can store your wealth forever, right? And finally, no actual profits. None of these companies are actually profitable. OpenAI is burning $12 billion a quarter right now, right? So every prompt you make into ChatGPT is costing Microsoft money. They're burning it, and they're burning it at a ferocious rate. And so, all these other companies are doing the same thing. Peloton has never been profitable, and yet people thought like, oh, it's the next big thing in biking. I can bike with an iPad in front of me instead of going out with a real bike and enjoying nature. I can bike with a video of nature that I'm fake passing by, right? So this time, unlike the other previous times, this time the money itself has been in a tremendous bubble, and everything else that I've been referring to are bubbles on top of the monetary bubble itself. You can avoid and it's going to pop. The monetary bubble is absolutely going to pop, and it's going to be absolutely nasty in an economic sense, hopefully not in the real world sense of, as I've discussed before. Probably some perturbations. Hopefully nothing that is too horrible. But you can avoid the bust by storing your capital in money itself. This is the third time I've brought this up. Gold and silver are actual, natural, from the grace of God to us, money. After the bust, you can apply your capital to sound businesses. And then bubbles, my final point is bubbles will be entirely avoided with sound banking. We don't have time to get into, I wanted to do a little diatribe on sound banking, but we are pressed for time. So I will just leave it on that statement. Bubbles could be avoided entirely if we had honest banking and no central banks.
As silver begins to decouple from paper markets, another silent signal is flashing bright red: the gold-silver ratio. For decades, this ratio has been a key indicator of silver's relative value, and right now, it's screaming opportunity. Historically, when the gold-silver ratio rises above 80, it signals that silver is undervalued. In early 2020, it spiked to over 120, one of the highest levels in recorded history. Since then, the ratio has been falling steadily, and in 2025, it's begun to compress even faster. Driven by silver's outperformance. This isn't random. It's the same pattern we've seen before every major silver bull run. When the ratio snaps back, silver doesn't just catch up, it overshoots. In 1980, the ratio collapsed from over 90 to under 20, and silver exploded. In 2011, the same thing happened, and silver surged again. Today, as gold continues to climb, silver is finally beginning to close the gap, but it's still nowhere near its historical equilibrium. That means one thing: the real move hasn't started yet. The gold-silver ratio is a leading indicator of sentiment, momentum, and positioning. And when it compresses violently, it's usually because silver is entering an aggressive breakout phase. The smart money is watching this ratio and acting, because history shows that when silver starts to move, it moves fast, and it moves far.
There's always a bust at the end of a boom. So here are some signs to tell if you were in a bubble or if the growth is real, because the two can intermingle and you don't know which is real and which is a bubble. The first sign is easy credit. Like I said before, if the credit has been easy for a while, and easy is a relative term, I understand that. If the credit has been easy for a while, you might be in a bubble. And I said, when I was first on my journey, I said, well, the Federal Reserve, they're not perfect, but they wouldn't give us easy credit. They wouldn't, do it on purpose to make things fall apart. And then I looked, and the Federal Reserve rate had been 0% for 14 years. Now, I want you to understand, Dunnigan, I have a master's degree in economics, and I was not paying attention. That is how people fall asleep. You just go about your day, you live your daily life, and you see the news reports, and you hear, oh, the Federal Reserve has engaged in quantitative easing, and you go, oh, well, gee, that doesn't sound, that sounds like something important is happening, but, you live your life, and nothing much is happening until you take the time to analyze it, and then you say, oh, my goodness gracious, this is not good. So 0% credit for 14 years is probably easy. I think that fits the definition of easy credit. We are probably in a gigantic bubble of I cannot quantify the proportions. Second is unsophisticated participants. Are people who have no business participating in a market engaged in it? And the answer is absolutely yes. There are people engaged in crypto. There are people engaged in AI stocks. And these are, normal day-to-day people. They're essentially just gambling because they're chasing, that their day job is not producing enough income for them to survive. So they're taking high-risk bets on the stock market. This is a very typical effect, a phenomenon of an inflationary system where everybody stops doing productive work and everybody becomes a stock jobber trying to get the next quick buck. Third, are natural laws being broken, right? When somebody says we've created a new paradigm where, we have anti-gravity boots. Oh, well, okay, I'd like to see those, right? Well, we're developing. They're still in developing, but trust me, those anti-gravity boots are coming out tomorrow, right? Or coming out next year once we get enough funding. Are some sort of natural laws getting broken? I have seen on crypto websites, I have seen declarations that Gresham's law, which is an economic law, it has been broken.
If there's one signal that confirms we're heading toward a monetary reset, it's this: The world is abandoning the US dollar, and it's happening faster than anyone expected. BRICS nations, led by China and Russia, are no longer just talking about de-dollarization. They're doing it. Over the past 2 years, these countries have added nearly 800 tons of gold to their reserves, dumped US treasuries, and launched alternative payment systems designed to bypass the dollar entirely. This isn't just geopolitical posturing. It's a full-scale currency shift. And when the global reserve currency begins to lose its grip, everything changes. Historically, reserve currency transitions are rare and violent. But unlike past eras, the world now has digital tools and coordinated blocks that can accelerate the process overnight. And here's where silver enters the equation. While gold is the central bank's hedge, silver is the people's hedge, the metal for those who can't buy gold in bulk, but still want protection from fiat decay. As the dollar weakens and faith in fiat crumbles, demand for silver will spread like wildfire. It won't just be a monetary metal, it will be the bridge between collapsing paper and real assets. When the dollar loses its crown, silver won't ask permission. It will surge, not because it's precious, but because it's trusted. And trust is the last currency that matters.
Everyone's really excited about AI, and you watch an AI video, you go, okay, that's kind of cool. That does indeed look like Barack Obama, and he's saying something stupid, or that does indeed look like Donald Trump, and he's saying something stupid, right? But how can you tell if the growth is real or not? How can the plumber under the sink say, you know what, I should probably continue my day job, this other thing that my friend has just got introduced me to is probably not real. I think his gains are not real, and he's going to find out this is not true, right? So real growth, it's hard. It can be hard to tell in the moment, but real growth, mankind, we are constantly improving the world due to the invisible hand, right? Innovation automates distasteful jobs and simultaneously opens up more productive work for everybody, right? The pig farmer is the first person who says, you know what? I need a power hose, right? I'm tired of, sweeping the stuff with a broom, the pig waste, I'm tired of cleaning out this by hand. I need a power hose. Let me get a power hose and clean this pen with a power hose. That's an automation. That's an innovation, right? And if the power hose hadn't been invented yet, some entrepreneurial pig farmer would say, oh, you know what? Let's come up with this. Then I could sell it to the other pig farmers. That's what happens, right? Chamber pot maids and washerwomen were jobs. Those were careers that people had. You would go, before plumbing, people had to use the bathroom in the middle of the night, so they had a pot by their bed, and someone would come by in the morning and clean it out for money. Or if you were less wealthy, you did it yourself. But if you were of means, you paid someone to do it because it's disgusting. And washerwomen, people would come by and wash their clothes by hand. These jobs no longer exist. They're not career paths. But a YouTuber is now a career path. I am talking to you, and my friend Rafi and other people do this professionally. I'm just doing this as a side hustle. It's not not a full-time professional gig for me, but it is for other people, and they can make a living doing it. That is real growth. But there's also the inflationary side of like I said, these days you click on YouTube, half the stuff is AI generated videos of people farting, and you're like, are people really watching this? You have to wonder, is this real? Are people really being duped by this, or is this just a bubble on top of a bubble, right? So, like I said before, bubbles are solely formed by artificial credit expansion. With real money, these do not form because it is quickly discovered that whatever you were going to invest in is not producing outcomes. So you say, okay, well, this is not producing profit, so I'm cutting my losses and walking away from it. But when new credit is constantly pumped into it, it can look like real gains. So, and like I warn everybody, eventually, and it can take a very long time, the bubbles always pop.
In the final stages of collapse, the panic always begins the same way. People try to sell what they don't understand and hoard what they do. And right now, a growing number of experts are warning that silver holders must be ready to disgorge. Not out of fear, but strategy. Because when fiat implodes and real assets are auctioned off for cents on the dollar, only those holding silver will have the leverage to act. Picture the moment. The headlines scream currency crisis, banks freeze withdrawals, and the average person is stuck holding useless digits on a screen. But silver? That's spendable, tradable, and real. And this is the moment where everything flips. The man with a pile of physical silver isn't a collector anymore. He's a buyer of farmland, housing, equipment, and even businesses. Not because silver has changed, but because its true value has finally emerged. But here's the catch. If you don't hold it, you don't own it. And when the revaluation hits, silver will vanish from the market faster than it did in March 2020. Dealers will go dark. Premiums will spike. Weak hands will be flushed out. And only those who held through the noise will be in position to capitalize. That's what disgorge really means. Prepare to let go when the world is desperate, because opportunity favors the prepared, not the panicked.
Sure. The most important thing is how to spot a bubble if you're in one, because it's a lot easier to see a bubble if you are not in one. Everyone who watched Bernie Madoff, when the Bernie Madoff scandal broke, everyone who was not in that scandal said, what a bunch of idiots. Who would put their money with a guy promising, 13% returns year after year with no risk? I mean, clearly that was a Ponzi scheme, But when you're in one, when Bernie Madoff is sweet talking, you go to check on your money, and he's got all the charts right there in front of you, and all his office workers are busy little bees typing away, and he's got the keys to the city, and he's got the he's got the certificate of approval from the stock market. It looks real. Bubbles look real. That's why they happen. If they didn't look real, people wouldn't fall for them. So especially if you are in one, I'm going to give some tips to think about how you can tell if you are in a bubble. I was in the bubble. I had a 401k. I had, I owned some cryptocurrency. I wasn't thinking about this stuff until after the mysterious virus of unknown origin hit our shores. And that changed my way of thinking. And I realized I am in a giant bubble. And I sort of like if you're holding a grenade, you kind of put it down and slowly back away. I pretty much did that and extracted myself from the bubble. And now I'm just here to help everybody else see, we are probably in some sort of giant bubble. And you should think about, here are some signs that you can see. So bubbles are created by banking. Dishonest banking. Let me be very clear. Honest banking would not create a credit bubble. Dishonest banking creates credit bubbles because the fake dollars that are generated are confused for real loanable funds. People think, this is real profit, but it's just inflation. It's just dollars being printed that are not backed by anything and cannot be redeemed for gold at the end of the day. So fake businesses' success attracts real money from people seeking yields. What does that mean? I want you to imagine, Dunnigan, imagine you're a plumber and you're working hard for your daily bread, and you are in some lady's house and her kitchen sink is leaking and it's clogged, and you are underneath the kitchen sink, and you are, the border of the kitchen sink is jamming into your back, and it's dark and it smells like mold, and you're getting, who knows what dripped on you, and you're making some money. But then your friend comes to you and he goes, "Oh, by the way, Dunnigan, I put up these AI-generated videos of people farting on YouTube, and I made $200,000 in a week." What's that guy under the sink going to say? He's going to say, "What the hell am I doing here, right? Why am I under this sink, digging away muck from some old lady's sink when I could be making AI-generated fart videos on YouTube? Easy peasy, people click and I get the money, right?" So he stops his job as a plumber and he runs off to go join the circus, right? He runs off to go join this AI bubble, or this bubble of AI-generated content. So those who invested, but eventually these yields prove false, right? That eventually everyone's like, okay, no one's really, it's probably bots watching the AI videos that are being generated by other bots, right? Eventually those yields prove false and a bust follows. So those who invested look quite foolish in retrospect, but bubbles do look sound in the moment.
The warning signs are no longer subtle. They're blaring. The dollar's decay, the fractures in the financial system, the social unrest boiling just beneath the surface, all of it points to a single outcome: collapse. But while chaos consumes those who clung to fiat, silver holders will stand on the other side with opportunity in hand. Not because they timed the market perfectly, but because they understood the game before it ended. History shows us that in every economic breakdown, real money reasserts itself. Not through headlines, but through action. Silver has been quietly reclaiming its role, 1 ounce at a time, And when the system finally snaps, its value won't just rise, it'll be undeniable. That riverfront property, that farm, that land. In the aftermath, they won't be priced in dollars. They'll be priced in ounces. So for those who've been preparing, the future doesn't look like devastation. It looks like a transfer of wealth. The biggest one in generations. If you see what's coming, now is the time to act. Because once the collapse begins, silver won't just be an asset. It'll be the key. Make sure you're holding it when that moment arrives. And if you want to stay ahead of the curve, hit subscribe and join us for more truth they won't show on mainstream finance. This is not financial advice. Always consult a qualified professional before making investment decisions.